are definitely cities worth to put an eye on. When I think of retail, we do not see the top 5 cities. Of course, we have them as well, but retail is always a little bit outside. And so this is not the point. Where I would take a look at is cities like Darmstadt. Maybe you never heard that city, but it's just 30 kilometers in the south of Frankfurt. We will sell a department store in the city on the high street, and we expect many international investors taking a look at it because the product is fantastic. The building and the tenant, the rent roll. You have cities like Wiesbaden, or which is in the west of Frankfurt. You have cities like Augsburg is also interesting. You have several cities, B cities, where you should take a look on the top location, the inner city location, where you always have demand from the user side, the occupier side. When I look at the alternative investments like student housing, it's worth to take a look on cities like Dresden or Jena, where you have 40,000 students on 400,000 inhabitants. Where the beer just costs half of the price in Frankfurt, you have the need for student housing, and it absolutely makes sense because you have a fantastic university there. In Jena, you have Zeiss Optik, who need well-educated students, and there's also makes sense to invest some money into residential because these people need to live in nice apartments and houses. So there are lots of fields to play around in Germany and to earn money beside the top 10. Definitely.
Yeah, on the retail side, we were prepared to look at smaller secondary centres as long as you're dominant in that location. But I suppose the domestic money's probably prepared to go to that location because they know the market, and the international money, it's either going for as we've discussed before, it's the top-notch asset in the Big Seven. But some of the managers of foreign capital, they've got higher return requirements. So I think they're naturally being pushed to these secondary locations because that's the only way they can, deliver on their return requirements. And I've got a small example of a retail asset in a town called Hanau. That's also Rhine-Main conurbation. It's probably about 20 kilometers to the east of Frankfurt. And we've recently put that on the market. And the interest from international third-party managers has been quite astounding. Whether they actually commit and bid on the asset is another matter, but suddenly from putting it on the market to going from a long list to a short list, there's a lot of interest. And we'll see where that goes.
And more interest than maybe there would have been, say...
No, we marketed this building 12 months ago and we didn't get the interest we wanted, so we took it off the market. So it's come back.
Maybe if we have interesting locations, we are not telling everybody about it, but given that we are operating a pan-German platform and we have some funds that also especially invest regionally outside the top 5-7 cities, we're definitely looking at a lot of smaller towns. Given, I just mentioned, we have a federal structure within Germany. We have a lot of locations where government-related services are provided with. So there are smaller towns in the size of 100, 150,000 inhabitants that are quite interesting because they have a dominant role in administration in their region, and there you can make quite reasonable investments as long as you look at the size of the property in relation to the market size. You've seen a lot of transactions in the last 5-6 years where you have regional headquarters of big German companies sold to investors, closed-end funds, international investors. But if you actually look at the building, they might be too large for the respective market they are operated in, so that after the first lease expires, the tenant has a quite high negotiating power to bring down the rents. But if you're in the smaller towns and have a reasonable-sized office building, retail building, that can be very profitable because you might be one of the few buyers looking at it. It's not to say that you're the only buyer that will look at it, because you have another type of competition in these markets. It's not the institutional money, it's local money from wealthy individuals that lived in these areas, from family office that know these areas quite well. And they can be hard competitors when it comes to pricing on the buildings, because they have other decision structures, they have lower operating costs sometimes, so it's not that easy outside. But if you have the network, the smallest towns are quite profitable in the sense that you might be able to really get some deals done easier or with less competition than in the bigger cities.